money on my mind, 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 money on my mind. So money is all I think of. Money on my mind, money on my mind, money on my mind, money on my mind, money on my mind.
Alrighty guys, thank you for tuning in to another episode with your favoriteest blind financial coach and advisor, Blickety Blinding himself. But you want his government name, right? You want the government name, right? It's Darrin Harvey. Google me. And you are listening to Financial State of Minds, the radio show and podcast where I help you get to that bag, manage that bag, and grow that bag as best as possible by me teaching, preaching, and speaking financial literacy, business literacy, and all things money related. We're back again with another lovely episode about credit. We're over here, of course, in the beautiful city of Oakland, California, where I am still recording at. I don't remember what episode it is, so I'm not going to even give you a number. Moving forward after this episode, there's no numbers. And I just want to thank everybody for tuning in to what radio station, if you don't know already? KGPC 96.9 FM. You might be listening to it on the website, kgpc969.org, or you might be listening to it on your favorite streaming podcast platform of choice. Either way, thank you for tuning in. So, today's episode, what are we talking about today? It's something credit related because I'm the credit guy, for lack of better words. And yes, we are talking to everybody who needs to repair their credit, or they're trying to get into the 800 excellent territory, or at least 750, 740. We're talking about credit builder cards, specifically credit builder cards. But I'm going to explain to you the whole world of credit builder accounts, cards, and the like. Without further ado, I ain't wasting more time. I'm just going to get right into it. What is a credit builder card, or what are credit builders? You're just wondering, Darrin, what are credit builders? Tell us what this is, because my credit is garbage. So yes, a credit builder account or card is what it sounds like, an account or card or both with the distinct design to help you build your credit or repair your credit, however you want to frame it. That is what credit builder accounts specifically are for. And it's for those people, generally speaking, who have bad credit, they have no credit, they have tarnished credit. The professional word is impacted or subprime credit. The point is, if your credit is trash, these things are designed for you. For everybody who has an 800 credit score, you don't really need this episode. You can just stop right now or listen to some other previous episodes, unless you just want to learn, because who doesn't love learning about credit? So those are credit builder cards. There's two different types, basically. So what are these two different types? Well, listener, there are credit builder cards, and they could be in debit or credit card style, like a Visa or a MasterCard, American Express, Discover, you know those guys. Or they can be accounts, or they can be in installment loans, meaning that an installment loan, for those who don't know, are loans that are just like your mortgage. They're just like your car. They are loans where you take it out, you pay it one time, and then you're done. You're done with that loan. If you want to go buy a new car, you want to go buy a new house, you would have to open up a brand new loan. And you pay it down usually in monthly installments, which is why they call it installment loans. Those also include any type of loans, like personal loans or debt consolidation loans, or even if you want to move into the business realm, business loans. Again, anything where the account closes after you successfully paid or unsuccessfully paid, aka default, is a installment loan or account. Now, the other type is called a revolving line of credit. So a revolving line of credit is basically normally a credit card, meaning that you have an account or you have a trade line, and I'll explain what a trade line is in a second. You have a trade line where you have a line of credit, you pay down the balance, and then you can reuse that line again endlessly until you close it, or again, you default. Those are the only two ways accounts get closed. Or sorry, I forgot. I'm sorry. Let me correct myself. There is a third way. The first way, again, is you close it manually. The second way is you default and it closes down like that by the lender. And the third way, which does happen, is you don't use your card over a certain amount of time, usually a year or two, sometimes longer, and they will close it for not being used. There are credit builders that act as revolving lines of credit, and there are credit builders that act as installment loans. So you should really get both. If your credit score is not the best, you need to use both types of credit builder accounts. Now, how do these credit builder accounts actually work? Well, listener, it works like this. Basically, credit builder companies, and today we'll have 3 examples of them. They are trade lines, and these trade lines report to at least one of the 3 credit bureau reporting credit unions or credit places, for lack of better words. If you guys don't know what they are, you do. It's TransUnion, it's Equifax, and it's Experian. Those are the 3 credit bureaus that report your credit score, and they use either the FICO system or the Vanex or Ventrex, I forget how you pronounce it, system to kind of calculate your score. So trade lines are just any company or product that reports to a credit bureau, at least one. And this is also true for the business side. You tend to hear trade lines more for business, but it's the same definition. Again, a trade line is just a company that whether you buy their product or you use their service, they will report that purchase or your spending, if you've done correctly, to at least one of the 3 credit bureaus. That is trade lines. That's what the credit builders are for. And okay, cool, you got that. Darrin, exactly tell me how this helps me turn my credit score from a 500 to a 750. All right, let me tell you. So, how does this actually work? So basically, and I basically explained it in the definition. You sign up with one of these companies, whether it's free or a paid subscription. And also, by the way, secured credit cards work exactly the same. You basically sign up with these companies, and your payment basically is reported to the credit bureaus, at least one of the 3, and then it's reported as successful payments, at least of the minimum payment, and your credit score will be built or be positively impacted, as we like to say in the financial world. So if you keep doing this over time, usually, don't hard quote me on this, but generally the average is 6 months or so, it'll really start positively impacting your credit score. But it could take longer depending on your personal credit profile, which makes up your credit score. So if you want a specific time frame or a more accurate guess, DM me at Financial State of Mind, yes, shameless plug, and in a consultation, I can tell you that no problem. But again, these credit builder companies are reporting your positive payment history to essentially to the credit bureaus, and in turn developing a better credit score. That's how they help you out. And the only real difference between a credit builder card and a secured credit card, which is technically a credit builder card, is that a secured credit card is still truly a credit card where that active line of credit is there. And also it could have a potential to graduate from a secured credit card to an unsecured credit card. None of these credit builder accounts or charge cards, spend cards, however you want to call it, generally speaking, offer an upgrade or what we call a graduation in the finance world sometimes. That is basically, I can explain it more thoroughly, how credit card builders work. In this particular episode, I'm going to really focus on the cards itself. I'm not going to go too much into the installment accounts. I'm probably going to make a part 2 because I just want to offer a lot of options for everyone who's listening who needs this. But for right now, again, we're going to focus on the cards. And basically, I'm going to talk about the 3 main credit builder charge cards, I'm going to call them moving forward. that I would advise people try or look into and learn more about, but I'm kind of going to give you a brief summary of the three and then kind of give you pros and cons, what I think about the whole thing, what I recommend them, and stuff like that. So, without further ado, let's go ahead and do it. The first company that offers a credit building card service is called Extra. Literally, like extra, like read all about it, or you acting extra, or you get the point. It's called Extra. So what Extra does is essentially, it's kind of like a middleman, and basically their service attaches to most banks, not any bank, most bank accounts that you probably already have. I'm pretty sure the bank account you have, if it's Bank of America, Wells Fargo, Chase, 90%, 99% chance Extra will work with them. And basically, Extra sends you their card. And basically, to my understanding, it's a Visa card. And basically what it is that you're front loading that card. Very similar to how a gift card works. So you front load the card, and then basically you spend the card like it's a gift card. And then the next day it's taken out of your card, and then that is reported to the two credit bureaus. I believe it's TransUnion and Equifax. I don't believe they report to Experian. Please double check that yourself. But it's definitely not all three credit bureaus. They report to two. So, but the point is, that's how it works. You attach it to any bank account you already have, and then you literally get their card and you spend it like it's a debit card or a gift card or a charge card, and then it will essentially take that charge out of the card or the balance, and then go ahead and report it to the credit bureau. And it's just deducted from your checking account, right? So they don't have to worry where the money's coming from. It's trusted, whatever. And that's essentially how it works. And the idea is you keep doing this, and you keep doing this over time, 3 months, 6 months, 9 months, 12 months, 18 months, 24 months, 36 months, however long you need to use it. And it will improve your payment history. That is how it works. Extra, the benefits of Extra is primarily what I just laid out. All of these companies, including Extra, but I'll repeat it for each company. Generally speaking, there is no interest rates. There are no foreign transactions, to my understanding. There is no credit limit because you're essentially using your own money or your own checking account as your credit limit. And there is no hard inquiries, so it does not impact your credit score for an inquiry. They're either no credit check at all. I'm pretty sure Extra is no credit check, but if it's not a no credit check, it's a soft pull inquiry where it does not affect your credit score. And if you don't know the difference between a soft pull and a hard pull is a hard pull inquiry where they pull every detail, or they can see every detail of your credit report, to my understanding, and it does stay on your credit report. And a soft pull is more of a look at your credit, kind of the same thing as if you're looking at your credit score through Credit Karma or NerdWallet, or maybe you're on Bank of America looking at your credit score through their app, and they're not pulling all the information, so it's not a hard pull and it does not affect your credit score. Sounds great, right? Perfect. What's the catch? Well, here's the catch. One simple catch. It's not free. That's the catch. Of course it's not free. They need to make money off of you somehow, right? So you can go to the website to check out the information, but when I took a quick glance, and this is what it is as of this current recording, which is in spring of 2023 and up in April, there's two basic membership fees. There's one that's $149 a year, and then there's one that's $199 a year. The main difference is that the $199 offers reward perks. So just like a lot of credit cards that offer rewards like points and stuff like that, you can redeem them for gifts or prizes or just money. It's a similar situation with Extra if you go with the $199 version. If you choose not to, then it's just $149. You don't get access to the perks. You don't accumulate points or anything like that. Either way, though, you are building your credit using Extra. I've seen the reviews. They look good. They look solid. Go ahead, look into them further, ask questions. You can DM me if you have any questions or if you don't understand what's going on with Extra, and I'll be more than happy to answer them. But this is a really good service, highly rated. This tends to be kind of the first thing I tell people to check out when it comes to things. Oh, that's not true. It's not the first thing. One of the first companies, more accurate, to check out. And yeah, it helps you build your credit score. So go ahead and check that out. The only con I say is that you have to pay for it. You have to pay a membership fee, a yearly membership fee. But to counter that, pretty simple. It's still cheaper than any secured card you're going to get, except for the one I'm going to talk about later. But it's basically cheaper than any traditional secured credit card. Why is that? Because a secured credit card, traditionally, you need to put up a bare minimum of $200 just to get the card. And then you have to wait until you've built your credit up enough to get that security deposit back. So it's a great alternative to then compared to using a traditional secured credit card. So you guys, again, I'll just end it there. Go look it up if you want to learn more information, or DM me at Financial State of Minds. The second company that I want to talk about is Chime. I've talked about it before, but I'm going to kind of go into a little bit more detail again this time. But before I do that, I want to remind you guys, you're listening to your boy, Blickety Blindy, the financial guru that you love and know, on KGPC 96.9, or maybe you're listening to it on the website, kgpc969.org, or you may be listening to it on Spotify, Apple Podcasts, or whichever streaming podcast platform of choice. Thank you for sticking around with me, and thank you for listening to me blabble and educate you on credit builder cards. Chime. What is Chime? Chime works fairly similar. Sorry, let me reiterate this. Chime works fairly similar to Extra, but there's a couple of key differences. Chime is actually a fintech company that combined itself or partnered itself with another bank. So they're a fintech bank, basically. Basically, it works very similarly, but instead of using your own checking account, you have to use Chime's checking account. So you go to Chime, you open up a checking account, which takes literally I think they're advertised on their website 5 minutes. That's their advertisement, not me. And you open up a checking account, and then you send money or you add funds to checking account, however you choose to want to do that. And then that's actually one thing. So, and this is something a client of mine actually kind of messed up on, for lack of better words. Literally, there is just a debit card, and then there's the actual credit builder function. So you want to make sure that you actually get the credit builder function. Compared to Extra, which allows you to use your own bank account, Chime, you have to use their own banking system or checking account. And then you add funds to that account, however you choose to do it. And then the process is essentially very similar, if not the same. You literally front load the card, and then Chime's pay it off. But the difference is it's paid off monthly. So say you have a balance of, I don't know, you choose a balance of $1,000 on your Chime account as your limit. That's your quote unquote credit limit or acting credit limit. Then at the end of the month, Chime will then pay it all off and then report it to the credit bureaus. And I believe they actually report to all three. Could be wrong about that. That's how it works. It's extremely similar to Extra, but you have to put money into their banking system. But other than that, it works nearly identical. Again, like Extra, there's no interest rates. There's no foreign transactions, to my understanding. Could be wrong about that. Is there foreign transactions? I don't think there is. No foreign transactions. No interest rates. No annual fees, but on the card. But the exciting thing about Chime is, as far as I know, and as far as I researched, and as far as my client who's used Chime told me, it's free. It's free to use. It's completely free. You might be wondering how Chime is free compared to Extra charging money. Simple. Because Chime asks you politely to put money into their banking system, they're just like any other bank in how they make money, which is they're probably investing your money that is in that checking account into other avenues of investments, and they're making money off of them partnering with Visa. So every time you swipe that card, they're getting a little piece of that merchant transaction fee that Visa makes, and then they send it, Visa sends it Chime's direction. That's how they're able to offer this for free. So this tends to be my number one recommended credit builder card, Chime. The main reason I recommend it is, one, it's free, so that means everybody asks it. Two, another benefit I forgot to point out, they don't do even a soft credit pull, to my understanding. It's immediate, you are approved. So because of their own bank is my guess. But there's no hard inquiry or soft inquiry. So you can get approved. Literally anybody can go use this right now of any financial background, and they can start improving their credit score as long as you make an income, obviously. And you have the ability to pay back on time, which it does automatically. So Chime, again, I can't recommend it enough. But if you want to learn more, please go to their website. I don't partner with any of these companies in any way yet, at least. Go ahead, Chime, Extra, call me. I'll take a sponsorship deal. I'll take an affiliate link. All joking aside, my former business partner, who I still have a great relationship with, he used Chime to repair his credit. And I think he started it at I think it was 600, low 600, and he has it in the 700s now, all thanks to Chime. So big thumbs up to Chime. Please, again, highly recommend it, and go ahead and check it out. So the last one I want to talk about today is called, I think it's Virgo or Virgo. I think it's Virgo. It's Virgo Believe. It's spelled VAGO. Virgo Believe It secured credit card. If I mispronounce it, I'm sorry. For some reason, I just can't pronounce that on there. But anyways, Virgo Believe secured credit card. It's my third card I want to talk about today. And basically, it's essentially almost an exact replica of Chime. It's an exact competitor. The only difference is it's actually a secured credit card, but it acts like the Chime credit builder card. So pretty much everything I said about Chime, just move it all over. But again, we'll state it again. You have to open up an account with Virgo Bank, and then you go ahead and, I guess the main difference actually is Virgo Bank, you create the account, then you have to create a secured account, and then that secured account is attached to the secured credit card. And then again, it acts like Chime. You determine a limit, then you go ahead and use that limit, and then you pay it off by the end of the month, and then that information is reported as a positive payment history to the 3 credit bureaus. So that's how it works. Very similar to Chime. Like Chime, you can create your own limit. Like Chime, there's no interest rates, no APR. You're instantly approved because there's no soft or hard pull. Yeah, it's a great alternative. I say you get Chime and Virgo. Get them both. And then you just have 2 trade lines, and then you're just building your credit up if you can do that, if you're able to do that with wherever your financial situation is right now. And again, both of these, to my understanding, are free because these are both banks. So they're making money off your money sitting in that account and the merchant fee that they collect from Visa in this specific example. So that's why these two come free compared to Extra, where that is a yearly charge. But all 3 of these are great options. If you can afford all 3 of these, do all 3 because you have 3 trade lines reporting positive payment histories. So Darrin, you done sat there and for the last 20 minutes talked about credit builder charge cards or secured cards, whatever you want to call them, Darrin. You keep switching the names up. What are the cons? There's got to be a con. Well, with Extra, it's a yearly payment of $149 or $199, like I explained. But I would counter that and say it's still cheaper than a secured credit card. And 2, the only other negative about credit builder accounts is they do not help with your credit utilization. So let me explain how these cards will help you when I explain FICO and how their system works. So for those who don't know, FICO, the main institute that calculates your credit score and what I believe 80% of lenders use, is they calculate your credit score in 5 ways, just in case you don't know. I've explained to it. I'll quickly breeze through it, but I have an episode about this in my credit card episode. 1, payment history at 35%. 2, credit utilization at 30%. 3, length of credit history at 15%. 4, credit mix of credit types at 10%. And 5, hard inquiries is at the last 10%, which makes up 100. So, credit builder accounts in general help pretty much the payment history, which is 35%, the mix of credit types, which is 10%, and the length of credit history, which is 15%. They do not help your credit utilization rate because you don't have a clear credit limit. You're creating it. It changes. You can have that flexibility. So there's no utilization rate. It just doesn't exist with these type of cards. So that is the only real knock I can think of when it comes to these credit builders. So if your credit has been damaged because you're holding high balances, these are not for you. They're not. As far as helping out your balance. Now, you still get benefits from the payment history if you're not 100%. You still get benefits with having different types of trade lines, which is in the credit mix, which is 10%, I believe. And then the length of history, having these cards over a long period of time and making successful payments, that still helps you out. So even if your payment history is 100% like me, you still might want to consider these because you're gonna add trade lines, add length of history, add that mix up. And this no promises, could be a way to get you to the higher echelons of credit, like 800, because a lot of people don't have the length of history and a lot of people don't have the different amount of trade lines that will bump them up to the 800s. So that's pretty much it for credit builder accounts. I'm really trying to think of anything else, but I can't think of anything else. That's it, you guys. I got nothing else. Thank you for tuning in. This is your boy, Darrin Harvey, a.k.a. Bookity Blondie himself. You've listened to another episode about credit on your favorite financial literacy and business literacy radio show out here in Oakland, California. KGPC is the station you're on, 96.9. This is Financial State of Mind, the show where I help you get to that bag, manage that bag, and grow that bag as best as possible through preaching, speaking, and educating you on financial literacy, business literacy, and all things cheddar, cream, moolah, scratchkilla, whatever you want to call it. It's money. I'm out of here, you guys. I'm hungry, and I got to go do another episode. Pray for me. I'm just messing. Love you guys. Peace, kings and queens. Before I end it, DM me, Financial State of Minds, for a free 30-minute consultation. Tell me that you've been listening to this show, and I may just bump it up to a free 60-minute consultation if you call me out on that. Financial State of Minds, DM me. Let's set it up. If you are interested in repairing your credit, if you're interested in learning anything to do with finances, I talk about everything. Accounting, bookkeeping, taxes. Credit is my brand and what I know best on the personal side and business side. If you want to start your own business and you need funding, that's what I am. I'm a business consultant. I can help you find funding for your business so you're not using your own money. And I'm not just talking about grants. I'm not just talking about investor money. I'm talking every single way of funding your business so you're not depending on just one way. And I don't care about your credit profile history. I don't care about your credit score. As long as you're willing to do what I ask or do what I advise, work with me, and you make a solid enough income to make all your payments, that's all you need to do. No more promoting for myself. I'm getting the looks. I'm out of here. Peace,